The new E, the new attitude. Brought to you by Mercedes-Benz.
Prime Minister Datuk Seri Ismail Sabri Yaakob today met with several leaders of the opposition in an effort to find some common ground between the parties in order to address the current health and economic crisis in the country. In the statement, the PM said the meeting focused on addressing the COVID-19 pandemic as well as the challenging economic situation as the ongoing lockdowns hurt livelihoods. Those in attendance were PKR President Datuk Seri Anwar Ibrahim, Amanah President Muhammad Sabu and DAP Secretary General Lim Guan Eng. Ismail Sabri said that mutual agreement was reached among the parties on strengthening the Malaysian Parliament's function as a responsible institution. The PM also pointed out the need for checks and balances against the executive for greater transparency and to meet the needs of the people. Opposition Coalition Pakatan Harapan said it will also consider the PM's invitation to join the National Recovery Council and Special Committee on Tackling COVID-19. The PH Presidential Council, in a joint statement, stated the importance of tackling the dual issues of the pandemic and economic downturn together while not being just a rubber stamp for the government's views. Petronas Chemicals Group's second quarter net profit jumped tenfold to 1.86 billion, largely due to higher product prices as the price of crude oil recovered. Revenue for the quarter rose to 5.61 billion from 3.18 billion ringgit. Petchem also declared its first interim dividend of 23 cents per share. For the first half of FY21, Petchem said cumulative net profit climbed 380% to 3.32 billion, while revenue grew 45% to 10.3 billion ringgit. Moving forward, Petchem says it will continue with its Operations Excellence Program and supplier relationship management to sustain plant utilization level at above industry benchmark. The group is anticipating petrochemical product prices to remain stable in the coming quarter amid continued reduced supply and demand recovery. Sime Darby's net profit for the fourth quarter of FY21 improved by 19.2% to 211 million on a higher top line as its motor division performed better. Revenue grew 29% year-on-year to 11.34 billion. Sime Darby declared a second interim dividend of 8 cents per share and a special dividend of 1 cent per share. These brought the total dividend payout for FY21 to 15 cents per share compared with 10 cents per share in FY20. For FY21, Sime Darby saw net profit jump 74% to 1.43 billion, while revenue increased by 20.4% to 44.5 billion from 37 billion previously. Sime Darby Group CEO Datuk Jeffrey Salim Davison says that its motor division saw demand for its BMWs and super luxury marques remain extremely strong, especially in China. He says the group is confident on prospects for its motor division, but remains vigilant on the possible impact of external factors. These include possible shutdowns in some of its markets and the fact that car manufacturers are facing a global microchip shortage. However, both of its industrial and healthcare divisions turned in lower earnings. Jeffrey says that although uncertainty will remain the key threat, it remains upbeat about its prospects, especially in the industrial segment, given the improvement in commodity prices. Heineken Malaysia returned to the black in the second quarter of FY21, posting a net profit of 25.3 million compared with a net loss of 18.2 million a year earlier. Quarterly revenue jumped 38% to 349.4 million as sales went up as businesses and consumers gradually adapted to the new normal despite intermittent lockdowns taking place. The earnings improvement was mainly attributed to revenue growth driven by effective revenue management, optimization of marketing spend and ongoing cost savings initiatives implemented by the group. The brewer had also settled the customs bills of demand of 7.2 million in June 2020. For the first half, net profit soared 15% to 98.8 million, while revenue grew 16.6% to 897.2 million. Heineken says that despite the negative impact from the lockdown and continued uncertainties, it will stick to its initiatives to right-size the organization and and cost base to drive productivity and efficiency. It will also continue to invest in its brands, improve its route to consumers, accelerate Heineken's digital agenda, and leverage on its strong business fundamentals. Creator of funds through Hyptis has placed out 158.5 million shares it owns in Mr. DIY Group Malaysia via a secondary placement. The entire offer size stands at some $135 million with an upsize option according to a term sheet cited by The Edge. The offer price range for the placement is between RM3.60 and RM3.68 per share. Mr. DIY ended the day 2.6% down at RM3.70. This is the first share placement by the private equity fund after the listing exercise in October last year. To recap, Mr. DIY listed on Bursa Malaysia on October 26, 2020 as the largest IPO in 3 years. Then, based on the issue price of RM1.60, Mr. DIY was valued at a market capitalization of 10 billion ringgit. Since its listing, its market cap has ballooned to around 24 billion ringgit.
This program was brought to you by Mercedes-Benz.